Jonathan, we've had more news today from Balfour Beatty, the UK construction and infrastructure business, and surprise, surprise, it's another profit warning. They always used to say that warnings came in threes, but I think this makes it about 6 in 2 years. And this is the UK construction part of the business causing problems again. They've had a review from KPMG. But surely this is an awful business. Should Balfour Beatty not just get out of construction? Isn't it just perennially awful?
Well, there's an argument that you can make that construction and the PFI portfolio, those infrastructural investments, sit well together, that you find out about opportunities and are able to seize them for investment because you're building the hospital or the school in the first place, and that cash flow from construction, which is pretty unprofitable business, helps to prop up the portfolio side.
Sounds very nice in theory, but it doesn't explain the existence of several infrastructure investment groups, such as 3i Infrastructure or John Lang Infrastructure, which seem to survive very nicely and win plenty of contracts without having to have this construction business kind of hanging onto its coattails.
Well, I think you've hit the nail on the head, because if you look back historically, what you find is that there used to be quite a lot of building contractors that had stock market quotes, AMEC, for example, and most of them have disappeared. They've either turned into something else. AMEC is now an oilfield services business, or quite a lot of them have gone private on the other hand. And the characteristics of contracting don't seem very effective when put onto the stock market. Investors don't seem happy with the lack of visibility of earnings.
It's not surprising given the problems contracts that there have been over the past many years in this sector. But do you think that always has to be the case? I mean, Leo Quinn has got a turnaround strategy in place that's going to be more disciplined bidding and more disciplined management of the contracts. Apparently previously they didn't have the paperwork in place to allow them to get all the revenue from contracts that they were supposed to get. That's how bad things were. But do you think it can be turned around, or do you think this is going to be perennially a very difficult business for public investors to put their money in?
I think if you observe businesses where the city has a structural gripe about them, what tends to happen is that that gripe will go away if performance improves and is then consistently pretty good. You know, this is what happens with conglomerate businesses. I think it's going to be much tougher for Mr. Quinn, because the characteristics of the contracting market have defeated so many other smart business people before. And there are a lot of people breathing down his neck, lots of companies that would like to acquire some of his assets, like the John Lang Infrastructure Fund. He's got a mountain to climb.
Well, Mr. Quinn is a turnaround specialist. This is where he'll really have to prove that that's the case. Jonathan, thanks very much.
Thank you.